Hello, everybody. Happy Super Bowl Sunday. I hope you guys are having a good Sunday. I hope all of your teams win. Hope you have a safe Sunday. 0 to 1 million. We're taking this account here up to $1 million with long-term investing strategies. We're investing $850 every week, whether the stock market's up, down, left, right, sideways, diagonal. It doesn't matter. We're investing $850 every week. Right now, we're at 9,700 account value. Cash is 1,000. Market value is about 8,600, almost 8,700. Okay, we did buy 3 stocks this week. We'll get into those, but a little bit of housekeeping first. The Dow, S&P, and NASDAQ were down on Friday, but overall for the week they were up. Just a heads up there. Amazon did have their conference call on February the 6th. Just a few little things about the 3 months ending December 31st, 2023 versus 24. Net sales 169 billion this year, or excuse me, 2024 187 billion, so that was up nicely. Operating income up from 13 billion to 21 billion, almost 50%. Interest income 901 million to 1.2 billion, about 30% increase. Net income 10.6 billion, went up to 20 billion, almost a 50% increase. Diluted EPS went from $1 to $1.86, up 86%. Very, very nice number. The only concern is operating expenses went from 156 billion, looking to go to 166 billion. I don't like that. Revenue growth is looking to be about 5 to 9%. Anything in the single digits, I'm not a fan of. And then the spending, I'd like that to come down a little bit. But all these companies with the tech, they're all spend, spend, spend. So they're kind of in line with their peers in that regard. Chipotle did have their earnings call on February the 4th. A couple things about Chipotle. For the full year 2024, they did have an increase of 5.4% comparable sales, driven by 4% transaction growth. So that was good. Full year 2024, sales increased 7.4%, driven by 5.3% transaction growth. So that was good. For the fourth quarter, revenue increased 13.1%. Love that number. In the teens, $2.8 billion. Comparable restaurant sales up 5.4%. Operating margin 14.6%, increased from 14.4%. So those margins are going up. Very nice. Always like to see that. Diluted EPS 24 cents. That's up 20% from 20 cents. So that looks nice as well from the year-over-year quarter. Like that. They opened 119 stores in the quarter. 95 locations had the Chipotle in the drive-thru, 1 international store. So that was very nice for the quarter. We're talking for the year, the full year, year-over-year. They opened 304 stores, 257 with the Chipotle and 3 internationally licensed stores. Chipotle is going to be really benefiting from the Chipotle stores. Imagine yourself after work, you're tired, you don't even want to get out of your car. You just want to go through a drive-thru. You might pick a place that has a drive-thru. Chipotle is now going to have the Chipotlanes with the drive-thru. So that's going to drive growth for each individual store, having that option for folks to stay in their car, just a quick in and out. They don't even have to get out of their car. Still have the inside the restaurant if you like. You can use the app and order ahead of time and walk in the store if you like. I think that's really going to drive growth. Some of these Chick-fil-A, Raising Cane's, and McDonald's, a lot of their sales are from the drive-thru and not really people going in the stores anymore at restaurants as much. So this is going to help put them in that category and help drive growth. So I really like that aspect of the store. Looking forward to see how that plays out. The thing about the stores, though, for restaurants, it's important to understand. When you open a restaurant, you have to wait 1 full year. And then that next year, the second year it's open, that's really where you see the true numbers. So Chipotle opened all these stores last year, January, May, June, October, even they opened stores in December. We've got to wait a full year for those stores to be open, right? So they'll be open all of this year. And then next year, 2026, we're going to see what those numbers look like. Those are going to be the real numbers, the keys to see what the revenue, the margins, EPS, all that look like. So we're laying the foundation now, opening the restaurants. Down the road, we're going to see the numbers on the back end, and that's really what's going to come into play. So long-term investing, we don't care what the stock's going to do here in the short term. We got to know that it's going to take time for all this to play out. Trust in the fundamentals of the company, and that they're doing the right thing and just keep track of everything. Another company, Google, had their call on the 4th. Just a couple things about Google. Revenue 96.4 billion. Estimates were at 96.6 billion, so that's kind of in line. Operating profit 30.97 billion. Analyst expectations 30.46 billion. They were up 1.7%, beating the street, so to speak. So they're okay. Well, not okay. I take that back. Overall, if you really dove into everything for the report, it's probably an A. The only thing that's a concern with Google is, well, it's with all the tech, is how much they're going to spend, right? So they're what they're spending versus revenue in, it's kind of not in line, so to speak, or it's not ideal. It's not ideal, we should say. Okay. Another company, Meta. Thing about Meta is they had their revenue 21% increase, $48 billion. So that's a beautiful number. Net income, 49% increase, $20.8 billion. EPS, $8.02, beat the street there. Their capital spending is going to be 60 to 65 billion in 2025. That's higher than what Wall Street was expecting. Now you're asking yourself, well, Meta's spending more than what Wall Street's expecting. Google's spending a lot. How come Google stock's down, Meta stock's up? Well, it doesn't make sense. You got to look at the revenue. The revenue for Meta, much more beautiful number. Google's, they didn't miss the number, but it wasn't as wasn't Meta's number. Let's just put it that way. So Wall Street was a little bit more forgiving with how much Meta's going to spend because the revenue was so good. You know, they're spending more, but their revenue's going up at a better clip, so they're a little more forgiving there. That's why Meta's stock price continues to go up, and Google's been beaten down a little bit. Not terrible, but just a little bit there. Another company that came out was Pulte Homes. Very excited about this one here. Earnings per share for Pulte Homes, $4.43. House closings increased 6% to 8,100 homes. I like that. Home revenue up 13%. It's in the teens. Super happy about that. $4.7 billion, billion with a B. New home orders, homes in the pipeline, 6,100 homes valued at $3.5 billion. Thank you. Unit backlog, 10,100 homes, give or take, 6.5 billion. So what do we got? We got $10 billion in the pipeline waiting to come in. That's going to drive up revenue handsomely. And just to put it in perspective, I live in Las Vegas. Las Vegas average home sales are at a record all-time high, $435,000, all-time high. Nationwide, average homes at all-time high, $419,000. As the home prices go up, they've got all this backlog of ordered homes. Revenue is going to go up, right? Beautiful thing. Love it. Some fun facts about Pulte Homes as well that's going to help out. Repurchased $320 million worth of common share stock in the quarter. Less shares on the market, share price has to go up, right? They also announced a $1.5 billion with a B, dollar share repurchase planned. You take those shares off the market, less shares, the price has to go up. If there's less shares on the market, right, and the revenue goes up, EPS goes up, stock will follow. So we just need to be building our position in Pulte Homes for now and just sit back and wait and be patient and just reap the benefits down the road as it goes up. So that's a good thing. A lot of good stuff there with Pulte Homes, I feel. Let's go here. Let's look at some positions. There we go. If we can get on there, we'll see here. All right, we got 9,700, 1,000 in cash. Gained 1.84%. We don't care about that because we're long term. See here, we got all the stocks here. What did we buy? We bought Amazon on Friday. Got one whole share. Cost per share $229. As you can see, it was cheaper than the ones we bought before, so we got a little bit of a discount. Thank you for the discount. Down 1.41% on that stock. So we're doing a dollar cost average. As it goes down, we're going to buy more and more and more. Our dollar cost average is going to go down. As the stock price turns around, all of the stocks are going to go up, and it'll be good. Another stock that we bought on last Friday was Google. 2 shares, cost per share $184. You can see that was a big discount from previously. Very happy about that. We're down 5.13%. So as we buy as it goes down, dollar cost average goes down. I'd like to see the stock go down another 5 or 10% if we're lucky, and just gobble up more shares. Be very happy about that. Another stock that we bought, the other one was Polte. Got 1 share at $106 a share. Previously, we had bought at $117 a share, so we got quite the discount, down 8%. Like to see this one go down 5-10% more if we could. Who knows if interest rates go up, all that jazz. Maybe we could drop 20% and really get them on sale. That would be actually pretty nice. I don't think so, but I don't think that's going to happen. But it would be good. If you look over here at the gain loss, you look over here, for example, at Meta. Oh, it's up 11%. Yay! No, that's not good. We don't want that, and I'll show you why. Bought the stock on the 21st of January, $616. 8 days later, $669. We're having to pay more for the same stock. Market value now is $714. We're going to be paying more per share, which means I can buy less shares. So we don't want to see this up 11%. I'd rather see this go down to 0 or lose 5 or 10%, so we can gobble up more shares. Down the road, we want to see it turn green and go up. But right now, we actually don't want to see this because we're long-term investors and in it for the long haul. I want it down so I can build a position and buy. Down the road, let it go up after I've built my position. But while we're building our position, we don't want to see these greens. That's actually bad. We want to see the reds when we're building our position. Once the position is completely built out, we sit back and wait. That's when we want to see it flip and go to the green, right? I don't want you guys thinking about tomorrow. Oh, what's the stock going to do on Monday? What's the stock going to do on Tuesday? Who cares? Well, I care. Preferably, I want it to go down so I can gobble up more shares at a cheaper price. We don't want to think about tomorrow. We want to think long-term, 3 years, 5 years, 10 years, forever, right? Warren Buffett had said, hey, if you bought a stock and the stock market closed today and it didn't open, the stock market did not reopen for 5 to 10 years, would you be happy with the stocks that you purchased? If the answer is yes, then you buy up the shares. If you're not sure or no, then you can't buy a stock in the company. If you say to yourself, I want to buy this stock, but I don't know what's going to happen in 5 or 10 years from now, you can't buy the stock because you're just uncertain about the company's future. And on the flip side of that, if you do like the stock and you buy it, that's great. That doesn't mean you just close a blind eye and don't check on it again. You constantly keep up with what's happening with the company, anything new, anything better, any bad news. You keep up with the conference calls, the earnings reports. You want to make sure that the company you like doesn't all of a sudden have bad guidance or some bad news or go south, because then at that point, you might have to reevaluate and cut ties with the company and find a better company to invest in. So you always want to think long term. You always want to keep up to date with the stocks. That's going to be so crucial for long-term success, and that's what we're about. Not the short term. We want the long-term success. So that's just something to think about. We're going to be putting $850 into the company or into the stock market account next week. $85, 10% we're going to save, and $765 we're going to deploy into more stocks. I do have another stock that I'm looking at adding to the portfolio next week. I'm very excited to let you guys know about that stock, what I think about it. I've got it in another account that I've had for over a decade, and it's been very kind to me. I think it's time I'm going to add it to this portfolio here, and I think that the company has room to run, room to grow, but in the meantime, I want to build up a little bit of position in this public account here where we're going from 0 to $1 million. Hope you guys had a great Sunday. I hope your guys' team wins in the Super Bowl. Be safe above and beyond. Have a great time, and I'll see you guys next week.